Hey everyone, it's Boz here from OpenCorp for this week's Wealth WOD. We're going through a classic today. It's all about buying under the median house price. And really what prompted this was not long ago, a couple of weeks ago, we had a presentation Cam and I delivered in our offices here at OpenCorp for about 80 to 90 people that came along to learn more about the fundamentals of property investing. And as we were going through some of our track record and I guess some of the portfolios that our clients had made, when talking about the areas that we place clients into, we got talking about one specific area here in Melbourne. Now, 3 years ago, our clients were buying under 500,000 in this area. We're seeing valuations between 700 and 730,000 today. And as we were talking through this, one brave gent in the crowd spoke up and asked a question that was fantastic because it allowed us to be able to understand and explain this concept. And what he said was, I actually live in this suburb, but I haven't seen any of the price growth that you're talking about. Now, the median house price in this suburb right now for 4-bedroom houses is $731,000. Okay. Now, I, with permission, asked if I could ask this guy a personal question. He said yes. And I said, what's the property worth that you're currently living in? He said around $900,000. And this is why he hadn't seen that price growth when it came to valuations from the bank. Okay? He knew that the property had been moving, but he wasn't understanding why he hadn't seen some of that price growth. So this is the point. Right here, triangle represents, let's say that this is the most expensive property in the area, might be $2 million. And the cheapest might be $400,000 as an example. And so the median is basically the middle value when all of the sales are lined up from the cheapest to the most expensive. Okay, so basically what that means is there are 50% of sales selling below the median and 50% of sales selling above the median. So 731,000 is that 4-bedroom median house price. Okay, now this is the thing. Your future net wealth is purely dependent on being able to build a portfolio, and to build that portfolio, we need to extract equity from our properties, and the people that determine how much equity is there are the valuers that work for the bank. So this is basically what we need to understand and how they operate. Remember, they're doing a fire sale valuation on the property. If they had to sell it Monday morning at 9 o'clock, what could they get for it? And herein lies the issue. So the $900,000 property, which is well above the median house price, has very few houses that are similar to it, okay? Compared to houses for say $600,000 that have a lot of sales at a similar price point. So the whole point of buying under the median is this, is that if you buy a property under the median for 600, you're being compared to properties more like the median and getting valuation uplift as a result. And that uplift creates the equity that you can use. Now, and valuers are happy with that because if there are a lot of sales happening at this level, they've got a high degree of confidence that if you had to put it on the market Monday morning at 9 o'clock, you could achieve this price for it, okay? Now, conversely, if the property is one of the minority at the top of the market, then they are being compared to sales which are actually worth less than what their property is. Okay? And as a result, that's not giving them any equity to be able to get another property and repeat the process and repeat the process. So, when we talk about our selection process, the TV would have you believe that it's all about location, 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 and real estate agents would say the same. That's only one part of it, and the specific property that you invest in a particular area relative to the median house price of the area in the capital city can make a big difference. So these two properties could be in the same street, but if you get the property selection part wrong, one works very effectively for creating equity and allowing you to duplicate, one not so much. Okay, so there's the question that was asked by someone in our presentation. Hopefully that's been insightful. The 85 people that were in our room loved it. Hopefully it's been good for you. Remember, be buying under the median house price and make sure that you've got more expensive property located nearby to help get you the better valuations.